Good morning, everyone. A very warm welcome to the 22nd Indirect Tax Colloquium organized by VILGST and Tax Connect. I would like to introduce our speaker, Mr. Vivek Jalan, who is qualified CA, qualified LLM, and LLB. He is the chairperson of the National Fiscal Affairs and Taxation Committee of BCCI and I. He is the regular speaker of various professional forums on the key areas of direct and indirect taxes. During the session, please put your video and microphone off. If anyone has any query, please write it in the chat box. We will answer all your queries at the end of the session. Now I request Samir sir to say a few words. Over to you, Samir sir.
Thank you, Pratham. Uh, Vivek, you there?
Yeah, I'm there, Samir.
Yeah, hi, Vivek. And good morning to all the participants here. We have this is the 22nd edition of this colloquium. We organize every month this VLGST and Tax Connect colloquium. We try at least we once a month we try to have this session where we try to cover all the important development that has happened over this last 1 month. And apparently, this particular month we are a very important development of appointment of president to the GST has happened. So we'll try to cover all the various aspects of that. Vivek will take us through the various other related issues with going forward. So and there are various other subjects that we are going to discuss in this session. So as said earlier, please, whatever queries that you have, whatever the doubts you have, please put it in the chat box. We'll take it up at the end of the session. And over to you, Vivek, for with the session ahead.
Thank you, Samir. And good morning to all the participants who have joined here. Thanks to Will GST for partnering with Tax Connect on this 22nd edition of this colloquium. Now, almost we have done this colloquium for the past 2 years successfully. And as always, once again, thanks to all the participants for the overwhelming response. More people will join, but as per our tradition has been, we'll start on time. I'll just share my screen. Avik, is my screen visible?
Yes, sir. Yes, sir. Your screen is visible.
Right. So we have a lot of topics to cover today. The most important ones being tribunal and of course disputes in input tax credit. We will also go through the nitty-gritties and the defenses in the litigation space. Litigation, as you know, in GST is the departmental interface with GST, and it is more or less concurrent in one form or the other, one procedure or the other. Some issues in customs, and of course, a very important issue on what should be your defense as a taxpayer in case there is a demand on you merely because you do not have a state-wise trial balance. But first of all, let us start with the GST tribunals. And as we know that the Honorable President of the National Tribunal, the bench at Delhi, has been appointed. However, very important to note is that the president has not entered office as yet. I will speak in detail as to why I am saying this. He has been appointed, but he has not entered office as yet, which is of important for all the taxpayers. So we will discuss on the tribunals. We will discuss on the issues which you are facing today in the appeals under GST already at the first stage, and which would have an impact in the tribunal stage also. Overall, the appellate procedure is on your screen. The provisions under section 107 to 118 and rules 108 to 116 relate to the appellate procedure under GST. So why at all we are discussing it now? Why we are discussing tribunals now is maybe the question, because at least 2 months are there for formation of the national bench or the principal bench at Delhi, and the state benches would follow suit. Possibly in the next 2-3 months, we would see 1 or 2 benches coming up. So why 2 months back or 3 months back we are speaking on the tribunals and industry preparedness or taxpayer preparedness for tribunals? There are 3 reasons precisely. We will speak on the other procedures, but 3 reasons why we are talking about GST 80 today in May 2024, when the officially your tribunals may be formed or started to be formed in August or September possibly. Number one, the tribunal, as we all know, is the last fact finding authority. So you have a 2A 3B mismatch, 1 3B mismatch, Waybill versus 3B mismatch, Waybill versus 1 mismatch. All of these factual issues would be dwelt with only at the tribunal stage. Thereafter, at the High Court stage, factual issues will not be dwelt with. Matter of law would be dwelt with, whether a demand is possible. In case of 2A versus 3B mismatch, that would be dwelt with. It is already dwelt with in detail. However, a very important point to note here is, till the tribunal stage, you would have paid 30% pre-deposit on your disputed tax amount or penalty amount, right? Friends, if you lose in the tribunal, if the tribunal's verdict of the principal bench or the state bench is against a taxpayer, the doors of High Court are open under 100 section 117. The doors of the Supreme Court are open even after the High Court stage under section 118. However, after the tribunal stage, you have to shell out the balance 70% also. So it would be a major hit on the cash flow. That is why you have to give your best at the tribunal stage. That is your best opportunity, and possibly, as far as cash flow is concerned, the last opportunity where you can limit your cash flow to 30% of the disputed tax or penalty amount. Number two, very important again, is the authority of the tribunal for condonation is only 3 months. Even at the first stage, you have seen a plethora of cases already in the High Court where a delay of more than 1 month was not condoned by the Commissioner Appeals. That is the first stage. At the tribunal stage also, a delay of more than 3 months cannot be condoned as per the GST law. However, on the basis of principles of natural justice, etc., you can always contest as per the Constitution of India. But as per the CGST, IGST, and SGST Act, a delay of more than 3 months cannot be condoned by the GST AT principal or state benches. So the question comes, what is the date by which the appeal should be filed in the tribunal? The limitation period for filing an appeal in the tribunal, first up, is 3 months from the date when the president at the principal bench or the state bench, as the case may be, enters office. And that is why I said initially during my deliberation that as of now, Shri Sanjay Kumar Mishra has been appointed as the president of the principal bench of the GSTAT, but he has not entered office as per Gazette. The date when he enters the office, that would be considered to be the date when your timer of 3 months will start ticking. Therefore, it is important that trade and industry, taxpayers should be ready with the draft of the appeals which is made to be made at the GSTAT national or principal bench or state benches. Why I am talking about principal and state benches both is some of the taxpayers might be the SME industries or the consultants here who are serving the SME industries might think that, oh, principal branch is in Delhi, I am least bothered about it. But friends, even place of supply issues may be applicable to your taxpayers or to your organization. In case there is a place of supply issue, then the appeal will not lie to the state benches. It will lie before the principal bench at Delhi. Therefore, in one order, it may be possible that there are two issues, one relating to place of supply, the other relating to other issues other than the place of supply. Possibly, for this order, you have to file two appeals, one at the principal bench, the other at the state bench. This would be clear once the GSTAT rules come into picture. Therefore, it is important to even focus on the principal bench, not only on the state benches. For example, I will give you a practical example which we are dealing. So one of our taxpayers, one of our clients, his supplier had supplied certain material or services in Punjab, but he mentioned in his invoice and GSTR1 the place of supply as Chandigarh. Therefore, this appeal would lie before the principal bench and not before your state bench in Punjab or Chandigarh, as the case might be. So, three very important issues. First up, and now we go into the nitty-gritties one by one on how to file an appeal and how to keep the appeal ready. All the paraphernalia, all the forms are there with you, right? There is nothing which is not there with you to make a draft appeal before the tribunal ready, right? So, as we said that already Shri Sanjay Kumar Mishra has been appointed as the president of the GSTAT, and already the states as well as centers have sent out their nominations for appointment of the members of the state and center. And it is possible that post the Lok Sabha elections in August or September, the process of entering into the office one by one, if not all at once, would start. So the GST tribunal will be a, is my voice low, Avik?
No, sir.
It's fine. Okay. So participant, you must please check at your end. So GST tribunal would be a 2+2 bench. Two members would be judicial, and one member would be center, one member would be from the state. Generally, it would be a double bench. However, in case your matter is below 50 lakh rupees, I'm actually going into the next slide. Just where I'm going with the flow. If your matter is below 50 lakh rupees, then even a single member bench could hear your matter. The appeals would be technology based, just like the GST portal. Now, the matter is before the GST Council as to whether the GST portal itself would be the portal for the tribunal also, or would be would there be a separate portal for filing the appeal before the tribunal. But whatever the case may be, we understand that it would be a technology based platform where you can file your appeal online. However, you need to submit a certified copy, possibly before the tribunal within certain days. Why we are saying this, we will come to it. So all the waybill matters, I'm sure all of you would have many waybill matters already pending to be filed before the tribunal. So all the waybill matters, and most of it would be the same, e-waybill expired, the goods not reached within the time, certain procedural issues, certain data issues have happened in the e-waybill, e-invoice, etc., etc. All of these matters we understand would be bunched together going forward. Why? Because, again, very important to note that unlike in the service tax or central excise regime, there is a time barring period for the tribunal also to issue its judgment, and that is 1 year. So within 1 year of submission or admitting of the appeal, the GSTAT has to issue its order, right? It cannot be like the erstwhile central excise and service tax regime, where even till today, 5 years, 6 years, 10 years old matters are pending. In the GSTAT, the matters have to be disposed of within 1 year's time. So there are certain issues, as I said, before the commissioner appeals, and the same issues are expected to flow to the GSTAT, and therefore we would draw a interface between the issues, and we would do an interplay between the issues at the commissioner appeal stage today and the same issues which may be going to the tribunal stage, and how to handle those issues. So as we said that as of now, the time barring period for the commissioner appeal to file the appeal is 3 months, and maximum condonation is 1 month. At the tribunal stage, you have to file your appeal within 3 months of the order date, or within 3 months of the date when the president at the principal or state bench enters the office, as per removal of difficulty order 2019. The question is that what happens in case you miss out? In case even after 6 months you miss out filing the appeal at the tribunal, the matter might travel to High Court merely on the matter of limitation. As we have seen at the Commissioner appeal stage, most of the High Courts have held that there is no power under the CGST Act wherein the Commissioner appeals can condone the delay in filing the appeal of more than 1 year, and therefore the matter cannot be condoned further. Possibly it could lead to the same fate in the GST IT, and therefore we are advising all our clients that all of you, all the consultant people who in the consulting space over here, you should make a list of all the matters which have been disposed of adversely at the commissioner appeal stage, so that from the day when the president of the center or the state at the principal bench or the state bench enters the office, you can file the appeal at the GST AT. However, again, this is a slide which will come afterwards. The slides will be shared with you. But because we are on this point, very recently, I think 2 to 3 days back, the Honorable Calcutta High Court, in similar matter, in the case of Sanjukta Bhattacharya, has held that merely because of limitation, the application can of at the commissioner appeal stage cannot be rejected merely on limitation stage, while there is a limitation in the CGST Act of 1 month for the commissioner appeal to condone the delay, yet there is nothing in the act which does not or takes away the power of the commissioner appeals to hear the matter on merits. Just because of limitation, the taxpayers should not be denied of the opportunity of a fair hearing. So all of you who are already facing a hardship, who have not or missed out this opportunity of amnesty scheme, also of filing a delayed condonation of with the commissioner appeals, you can take shelter. At least there is some ray of hope after this Honorable Calcutta High Court's order in the case of Sanjukta Bhattacharya. Same issue, same matter, in case if it is taken at the GST appellate tribunal stage, same High Court order of the Calcutta High Court may be taken shelter under. There is also a similar provision with the GST department. So as of now, the GST department respondents have to file an appeal if they are aggrieved against an order of the commissioner appeals. They must file an appeal within 6 months, right? Or if the respondents are aggrieved against a order passed by any of the authority in the GST department, the commissioner might call upon any officer of the GST department to file an appeal against such an order of the adjudicating authority. The time limit is 6 months. Additional condonation period is 1 month. Now, very recently, last week, in fact, this week itself, I was in Mumbai, and we were arguing a matter under Rule 96, Sub Rule 10. Now, what is 96 Sub Rule 10 and why it is connected to this point? I will tell you. Possibly some of you might be dealing with this issue. Under Rule 96(10), in case you have exported the goods under advance license, or if you have done a merchant export at 0.1%, then Rule 96(10) provides that you should not have taken a refund on payment of IGST. You can go under the LUT regime, but you cannot go under the on payment of IGST route. It was our respectful submission that where there is a provision in the GST law under section 107 itself that an order of the adjudicating authority can be appealed by the department also, then the department should appeal against that refund order of the adjudicating authority and not take a route under GST audit or another route under GST investigation to rake up this 9610 case. When the order has achieved finality, the only option before the GST department is to take the appellate route. This was held in the case of Saru Silver Alloys Private Limited by the Allahabad High Court, and there are other judgments also in the case of Eveready's India Limited, etc. So, in case you have this 9610 or such other cases where an adjudicating order has been passed by an adjudicating authority and the department takes the GST audit route or the investigation route to rake up that matter, you might take shelter under this, because under section 107 there is an opportunity with the GST department also to file an appeal within 6 months. Now, again, another issue very recently which we have contested is the issue again, and I have contested on this very ground. I have argued and I have pleaded before the Honorable Appeals Commissioner in these very words. I said, sir, there are two laws today. There are two GST laws today. One is the CGST law or SGST or IGST law, as the case may be, and the other is the GST network law. And both of the laws, they are not in sync. So now, one of the taxpayers in our case, what happened is that while making the pre-deposit, they have made the pre-deposit by DRC 3. Section 107, subsection 6, very clearly states that pre-deposit needs to be paid. What is the mode of payment? Whether you need to go through the same link while filing the appeal or whether you need to pay it through DRC 3, that is nowhere specified under section 107 or rule 106. Even section 49 3 read with section 49.4 read with rule 86 sub rule 2 provides that the cash ledger or the credit ledger can be used for payment of the pre-deposit. Whether it has to be done through DRC3 or it has to be done through the link in the APL1 form, that is nowhere specified, merely because a DRC3 was filled up while making the pre-deposit payment. That pre-deposit cannot be rejected by the appellate commissioner. The same was also upheld by the Honorable Bombay High Court in the case of Chetan Kumar Jasraj Palgota HUF. So I am told that there are hundreds of such cases which are lying already at various state levels. In case you have such a case, you can take it. If we take this same issue at the GST 80, first of all the taxpayers should be very, very aware and careful that whenever this utility comes, all of you would need to pay 20% pre-deposit while filing your appeal at the GST tribunal stage also. So when you are making the pre-deposit, ensure you don't do it through DRC 03. Otherwise, you might get into this same issue. Although as a Chamber of Commerce from the Bengal Chamber, we have represented before the GST Council that there should be a utility available to the officers to adjust these DRC 3s with the pre-deposit which is payable at the tribunal or the appellate stage. But till the utility does not come, all the taxpayers, all the consultants, you need to be very, very careful while making the pre-deposit payment. 20% of the dispute amount is a very, very large sum of money. You cannot afford to take it to High Court and spend at the High Court merely because of this technical issue. Again, a very, very important issue at the commissioner appeal stage, where which will spill over to the GST tribunal stage also, whether ITC credit ledger can be used for the purpose of payment of pre-deposit at the GST tribunal stage or not. It has been held by various high courts. On your screen, you can see two judgments already in this matter. The Odisha High Court has held in the case of Kiran Motors. The Bombay High Court, in a very, very important and widely published judgment of Oasis Reality, has held that after the issuance of Circular 172 of 2022, it is very clear that ITC ledger can be utilized for the purpose of payment of pre-deposit. However, now very recently, one of the taxpayers, he came to me and I have given this opinion on the basis of case laws, on the basis of the Circular 172. But fortunately or unfortunately, the taxpayer was filing an appeal in the state of Bihar. The Honorable High Court of at Patna has held adversely even after the issuance of this Circular 172 in the case of Flipkart Internet Private Limited. It has held that the ITC ledger cannot be used for the purpose of payment of pre-deposit. This matter has been appealed and in the Supreme Court, and the matter had been stayed by the Honorable Supreme Court at this point in time. But we understand that this is by and large a settled matter. Even at the tribunal stage, you can make the pre-deposit via the ITC ledger. Just like the commissioner appeal stage, you will get a maximum of 3 adjournments at the ITAT stage also. Just like the commissioner appeal stage, under section 107, you can add, adduce, alter, delete the grounds, right? However, if you are filing an additional evidence, then at the tribunal stage, 45 days are provided to the respondents to file a memorandum of cross objections. Very important. If the respondents, that is, if the department files an appeal in your case, where the commissioner appeal has held favorably in your case, and the department files an appeal against you and provides further evidences, then you are also under right to file a memorandum of cross objections within 45 days plus 45 days as a condonation subject to sufficient cause being shown. Under section 108, as of now, in case the order of the adjudicating authority is not available online, right? Then it is possible to file a manual appeal and thereafter within 7 days provide a certified copy of the order. The moment you file a manual appeal, a provisional acknowledgement would be provided. After you provide a certified copy of the order, acknowledgement in APL 02 would be provided to you. Similarly, at the tribunal stage also, the appeal can be filed in the manual form, right? Again, at the commissioner appeal stage, many of the times what has happened, many of the taxpayers, they did not see the order also because it was a manual order. Very recently in the suburbs of Karnataka, one of our clients, so what they did, they filed it is 3 hours from Bangalore. So they filed a appeal against a manual order of detention through courier. Now, whether the Commissioner Appeals has received the order, not received the order, they have not issued a provisional acknowledgement against the manual order, right? And the date of the provisional acknowledgement, that would be considered to be as a, and the date of when you are filing the certified copy of the order, that date would be considered to be the date of the filing of the appeal, right? Now, in that case, the taxpayer has not filed the certified copy of the order. The question is whether without the certified copy of the order, in the case of a manual appeal being filed, whether the issue will become time barred in case the time as per section 117 elapses. The Honorable High Court at Madras and Kerala High Court have ruled in the favor of the taxpayer, and they have ruled where the only way to file an appeal is the electronic mode. Then in such case, where the order is not available online, then the time barring period will start from the day when the order would be available online, or from the day when provisional acknowledgement is issued. So basically, the order does not become time barred in case of a manual appeal just because a certified copy was not filed. PKV agencies versus Appellate Deputy Commissioner, GST Appeals, Madras High Court, and Jose Joseph versus Assistant Commissioner of Central Tax, Kerala High Court, can be resorted to. So under Rule 108, appeal will be considered to be filed only when APL 02 has been issued. However, the date of the filing of the appeal would be the actual date of the filing. Similar is the provision in the case of GST 80. And of course, when you are filing additional evidence, the department can file a counter. So this is the list of 31 benches which are as of now approved. There are more than one, almost one bench for every state, and more than one benches in few states, like Uttar Pradesh has 3 benches in 5 regions. Lucknow, Varanasi, Ghaziabad, Agra, Prayagraj. Kolkata has 2 benches for 3 states. Gujarat and Dadra and Nagar Haveli have 2 benches. Karnataka has 2 benches, but both in Bengaluru. Goa, Maharashtra have 3 benches in Mumbai, Pune, Thane, Nagpur, Aurangabad, and Panaji. And Tamil Nadu, Puducherry have 2 benches. So this is the list of the benches. It's already there in the Gazette now. So as we have discussed, I think most of these points we have discussed while doing the interplay between the Commissioner Appeal stage and the GST 80. You can go through this presentation at your own pace. Okay, appeal. The form for filing the appeal is APL 05. We will go to this form in few minutes. So you have to file the appeal at the GST 80 in form APL 05, right? Rebuttal or additional evidence submission by the department can be in APL 07. Very, very important point. The point of difference between Commissioner Appeal stage and the Tribunal stage. The Commissioner Appeals can only confirm, modify, annul the adjudicating order. It can also enhance the adjudication order after giving an opportunity of being heard and issuing a show cause. Important to note that commissioner appeals under GST cannot remand back an adjudicating order to the adjudication authority. Therefore, if you have a 1 versus 3B, 2A versus 3B, e-way bill versus 3B, etc., etc., the commissioner appeals has to go into the nitty gritties of reconciliation, etc., etc. It cannot remand back. However, many of the times we see that the commissioner appeals due to paucity of time or other reasons. They do not want to go, they may not have the sufficient resources also to go into a reconciliation of 2A versus 3B, 1 versus 3B, etc. And therefore, they confirm this order. Friends, the GST AT has the authority under section 118 to remand back the matter to not only the commissioner appeal, but even at the original adjudication level. So the GST AT, say in this case, 2A versus 3B case, the commissioner appeals has not gone into the detail and it has passed the order against you. The tribunal also may not want to go and sit, and go into toothpicking of the 2A versus 3B, 1 versus 3B issues, right? But from the tribunal stage, the tribunal has the authority to remand back the matter to the original adjudicating authority. And your case can start at the original adjudicating level. So very, very important for these kind of matters. The employee of the taxpayer, the employee of the organization can also be a authorized representative and argue the matter of the taxpayer, even though he may not be practicing as a advocate, chartered accountant, cost accountant, or company secretary, right? So if you are into the employment space and if you have a big indirect tax team, then maybe you can try your hand at the arguing at the appellate tribunal stage also, if the matter is a simple matter, right? However, you need to be careful. All the consultants here also, one needs to be careful as to go to the tribunal with clean hands. In case it is seen that the consultant is found guilty of misconduct, then such consultant can be disqualified from further arguing in the tribunal at any point of time. Therefore, it is important for consultants who are not practicing in the high court, etc., who are practicing at the tribunal stage, for those who are practicing at the high court stage, or for those who have practiced in the CESTAT or who are practicing in ITAT, we all know that one has to go with clean hands. But for the newcomers who may be attending this webinar, please go with clean hands. At the commissioner appeal stage or at the adjudicating stage, some mistakes, of reconciliation here, there is an opportunity to get an adjournment come out with. However, at the tribunal stage, it may be possible that cost may be invoked on you, or you might be disqualified if you do not go with clean hands. Now, very important, section 121. Non-appealable decisions and orders. So an order of seizure or retention has to be only appealed at the High Court level, wider it. So in case your books of accounts, registers, etc. have been seized for more than 1 year as per the instruction, you might as well not wait for the tribunal. You might as well go to the High Court immediately, right? Even section 80 matters where the commissioner has denied to provide you installments. Might as well not wait for the tribunal. You might as well directly go to the High Court for installments if required. So these are the various forms. You file the appeal in form APL 05 at the tribunal. Then the demand or the order would be issued in APL 04. Cross objections. So if the department files an appeal against you, you can file your memorandum of cross objections in APL 06. APL 07, application under 112(3), wherein additional evidences are produced at the tribunal stage for the first time. It is possible for the department or the uh, applicant to file a rebuttal in APL 05, and appeal to the High Court will be in APL 08. So very important again, APL 05, these are the, I have just culled out the important parts. Others are all KYC and the general information. Name of your authorized representative needs to be mentioned in the APL 05. This is very important. So you must choose your consultant with precision, because his name would also be mentioned in APL 05. Consultants, on the contrary, should also before taking up the matters, they should be very, very confident. And there were cases in the CESTAT or even now at the ITAT stage where sometimes consultants are changed during the hearing. But here you have to give the name of your AR. Statement of facts, ground of appeal. Prayer is a very important part, right? Even at the commissioner appeal stage, we insist that prayer should be very important. I will come to a sample prayer. We will share this PPT with you, but prayer should be very, very exhaustive. Otherwise, sometimes if you don't take the right prayer, then merely because of this not taking the prayer, then your matter might be, held adversely. Again, very important, in case you are admitting an amount at the tribunal stage, you have to mention the place of supply so that the money flows to the right state. So what are the salient features of filing an appeal at the tribunal state? Cover page, index of the appeal, APL 04, certified copy of the order, statement of facts, grounds of appeal. General, you must argue, you must put in your arguments that the order should be set aside because it is based on assumptions, presumptions, conjectures, and surmises. This is important. You must provide your preliminary objections. Preliminary objections are primarily against the time barring period or against invocation of section 74. So for 1718, whatever orders you get now, or 1819 for that matter, whatever orders you get now would be under section 74, alleging fraud, suppression, or misstatement. So you must, if you are not convinced with the allegation of fraud, suppression, misstatement, you must contest as to why it is a bona fide case and not a case which is liable to be adjudicated under fraud, suppression, misstatement as per section 74. In case you can prove that there is no fraud, suppression, misstatement, then the time barring period under 73 would prevail, right? So this is very, very important. Always, wherever there is a 74 case, you must argue as to why it is not liable under section 74 and why it is liable to be set aside accordingly. Wherever there is a penalty, you must argue that why a penalty should not be invoked in case the case is as such. When you're going to the tribunal, we assume that you are convinced that there should not be any demand and balance of convenience lies in your favor. So if that be the case, you must argue on penalty exhaustively. Some of the, even I've seen consultants also, they just put in one case law for interest, one case law for penalty, and merely they put in that because the demand should be dropped, there is no tax demand, there should not be any interest, there should not be any penalty. That is not the right approach. You must pinpoint your case and argue very specific to that case why there should not be any penalty, why there cannot be any allegation of mens rea against you, or why there should not be any interest even on the basis of the fact that interest is compensatory in nature. And this is the prayer. So you can see there are 7 components to my prayer. You pray for setting aside the impugned order. You pray for setting aside the GST demand, interest, penalty. You also must pray for a personal hearing. You must pray for passing of such orders as might be fit. And most important, as we have discussed, you must always pray for adding, adducing, altering, deleting any grounds if the case might be. This gives you the liberty to add, adduce, modify, delete grounds also if required. Other than this, if you do not pray accordingly, then the matter would be may be held against you merely on the fact that you are changing your grounds. So friends, very, very important this tribunal stage. Now we will go on the salient features. You have all faced ASMT 10. You have all faced GST audit under section 65. We will discuss on the intriguing issues only. GST scrutiny under section 6, again under ASMT 10 section 61. Many of the times we are seeing that there are emails or messages. While we always advise that you must reply to the email or messages, however, you must always contest that the matter should be treated as void ab initio because it is the notice is not under any section and not in form ASMT 10. However, you are still replying to this notice. If you do not do this, if you do not take a protest accordingly, you would also be missing out on the opportunity to argue accordingly at the next stage, because there is an embargo under section 160 subsection 2. In case even there is a faulty notice or communication and the taxpayer acts on the communication, in future the taxpayer cannot take a ground that the communication or the order or communication or the notice was faulty, because the taxpayer has already acted in the matter. Audit, and the most intriguing issue today under GST audit under section 65. Specifically, we have argued a case very recently where the pan India trial balance was taken. The pan India creditors figure was taken for the purpose of raising a demand under second proviso to rule 16 sub rule section 16(2), wherein the pan India creditors figure was taken. It was assumed that the pan India creditors figures is the state figure also, and the creditors figures are all those creditors who have not been paid within 180 days of the invoice. Friends, while we are always advising all the taxpayers who are registered in multi-states to prepare a trial balance. So what we do also, well, before filing the 99C, our start point of filing the 99C is to prepare a state-wise trial balance. If you are using an SAP or any other ERP, you must at least prepare a statement of P&L balances on the basis of the figures in the business area wise, right? So that you have something to show, and you may get it certified by a chartered accountant or cost accountant also. However, the department is also barred to raise a demand which is ad hoc on the basis of a pan India trial balance merely because you have not given a state-wise trial balance. There are many ways and means by which adjudications can be done. They can take an affidavit from you that, gentlemen, this is my creditor's figure, right? However, merely because a state-wise trial balance is not given, to create a liability on the basis of pan India trial balance is arbitrary, ad hoc, liable to be cost. The same was held in the case of TMF Business Services Limited by the Honorable Madras High Court. It is our further submission in the matter of state-wise trial balance that nowhere under section 35 or rule 56 is it mentioned that it is mandatory to maintain state-wise trial balance. However, as per the Companies Act 2013, it is mentioned in the Companies Act that the books of accounts include a company-wide trial balance. Therefore, while the Companies Act provides that a company-wide trial balance should be made, the GST Act, on the contrary, does not require a state-wise trial balance. If the state-wise trial balance was such compulsion, then the statute or at least the rule should have provided accordingly. It is our further submission that the only place in the entire GST Act and rules where the word trial balance has been uttered is section 71, that is access to business premises. But in the same section 71, they have spoken about tax audit report, cost audit report, where it is not even possible to prepare a state-wise cost audit, tax audit report, neither it is required by the corresponding statute. Therefore, section 71, if read harmoniously, then the state-wise trial balance, it cannot be interpreted that section 71 talking about trial balance talks about state-wise trial balance and not pan India trial balance. The department cannot force a person to maintain books of accounts which is not mentioned in the statute, as was held by the Honorable Madras High Court in the case of DSV Air and Sea Private Limited, is our legal submission lastly on this ground. Again, you can go to our YouTube channel. We have, where there was a big hue and cry, even the writ petitions were filed in the Madras, in the Gujarat High Court, that section 73 extension is against 168A. We have said that the department can also invoke section 74. Madras High Court has held accordingly. Of course, you can argue as to why section 74 should not be issued on the basis of absence of mens rea. But you cannot argue that section 74 cannot be resorted to when the department is carrying on proceeding of audit under section 65. So you have to be careful on the ground which you are taking and the forum where you are taking the ground. Investigation, summons, search, seizures. Again, there is an instruction. You can go through our YouTube channel again at Tax Connect Advisory Services, where we have discussed in this video very recently on the very recent instruction on investigation which has been issued by the CBIC. However, we will discuss what are the benefits, what are the eases in the doing business which has been provided to the taxpayer by this summary. First, by this instruction. First, we will discuss on why this instruction has come. Around 2 months back, at the North Block, I am told that there was a meeting which was held by the Honorable Finance Minister of Union of India with the Secretariat, wherein the taxpayers have complained. In fact, we were one of them, that multiple agencies have been carrying out multiple proceedings in the GST law. There can be state investigation, central investigation, audit under section 65, scrutiny under section 61, access to business premises under section 71. So at any point of time, 5 or 6 authorities can issue notices or proceed against a taxpayer. We have requested that the taxpayer should be maximum investigated or can be issued notices by one agency, not so many agencies. DGGI, Anti-Evasion Center, State Investigation, Audit Authority, they're your own jurisdiction. That is too much for the taxpayers to handle. In fact, that very week, I was in one of the very, very developed states of India, I would say, and one of the biggest contributors to the GST revenue, where the Center Anti-Evasion Agency has issued a notice to a taxpayer on the particular matter where a supplier has not complied with its 3B and section 16(2)(c) was the case. Thereafter, the Anti-Evasion Center, they went to sleep. Thereafter, on the same issue, state investigation issued summon under section 70. The taxpayer went. State investigating agency, as you know, in most of the state, investigating agency is also the adjudicating agency, right? So state investigating agency, within a period of 3 months, they issued summons, took the statement and issued show cause under section 73 in the matter. Now, after 2 years, when 17-18 was getting time barred, the anti-evasion of the center rose from the slumber and they reopened the case with a summon to the taxpayer. So we took a ground that, gentlemen, already on the same issue, state has issued show cause, end of investigation. And what we got, what was argued by one of the officers was astounding. He said that, okay, state has issued under section 73, I will issue on the same matter under section 74. Finally, under the guidance of his seniors, common sense prevailed, I would say. But this matter was taken up before the finance minister, and therefore this instruction has been issued that at one point of time, one taxpayer should be investigated or should be proceeded against on the same issue by only one agency. Most important is with the center, where in case of DGGI or anti-evasion, where the superintendent is the last authority who will interact with you. ACDC will hardly interact with you. Now they have made it very clear that ACDC should issue the summon with a written reason to believe. There shall not be any fishing inquiry. We are doing a proceeding on a presumed evasion. Therefore, you are required to come at so and so time at our office. No. The ACDC should mention the issue, why the investigation is being held or why the summon is being issued to the taxpayer. The ADC or the JC is the grievance redressal officer we have seen till now, ADC is a long ask. Even joint commissioners are not available most of the times to those taxpayers against whom summons have been issued or investigations are on. It is presumed that the person against whom investigations are on, he is an evader. Before even passing a, before even going into the facts, a judgment has been passed, and GC does not meet most of the times. Now, officially under the instruction, the JC is the grievance or the ADC is the grievance redressal officer if required. The principal commissioner also is duty bound to meet the taxpayer. And in case it is with a PSU or so again, there was a very, I would say, while we can as of now look back at it and feel that it is weird or funny, I would say, but the person who has handled it knows what is. So a very, very big PSU, the managing director of the PSU was issued a summon under section 70, and his employees were threatened that the managing director of the PSU may be put behind the bars due to an evasion. This is humorous to the core. How can a PSU evade tax? There can be mistakes, there can be errors, but how can a PSU willfully evade tax? Even if that be assumed, how can a managing director of a PSU reply to such a fact? Because a managing director most of the times would not be that equipped with the GST law. So now they have issued that against a listed company, a taxpayer who has a long tax-paying history, against them, such summons or investigation should generally not be issued. If they are issued, then it should be issued with the authority of the principal chief commissioner or chief commissioner, and not with the authority of the principal commissioner. So this is these are the various issues in litigation. And now on the input tax credit issues. Very recently, the Bombay High Court has, I would say, hit the final nail in the coffin on GST on ocean freight. It has held there cannot be any GST on ocean freight, even if the contract is FOB. Expat salary, Northern Operating System case, already there is an instruction that the case to case basis it has to be seen. Just because you are paying a salary to an expat, there can or Northern Operating System judgment cannot be invoked against you. It has to be seen whether it was a contract of employment or a contract for employment with the expat. Now, in case of an expat, the department is also disputing the fact that those taxpayers who before issuance of a notice, they have paid the tax on RCM and taken the input tax credit under section 31 subsection 3 clause F, read with rule 36 1B and section 2 subsection 66. They provide, in brief, you can go through this PPT going forward, 31 3F read with rule 36 1B, they provide that self-invoice is the duty taking credit document under RCM. Therefore, in Northern Operating System case or in RCM case, even if you have forgotten the RCM earlier, you can pay the tax and take the input tax credit on the date of the invoice. The time barring period starts with the date of the self-invoice. Such matter is stayed by the Karnataka High Court in the case of Toyota Kirloskar Motor Private Limited. Similarly, there is another issue. Now, we are talking about Northern Operating System case, but it is applicable on all RCM cases. Can the self-invoice value be different from the invoice or the bill value of the service provider. In Northern Operating System case, if we are to take an example, one has to see whether second provision to Rule 28 can be applied in as much as whatever salary you have paid to the expat, can the value be of your self invoice be less than that value? I am repeating. Say you have paid 1 lakh rupees to the expat. Is it mandatory that your self invoice has to be made on 1 lakh? Of course, assuming it is a related party transaction. So in case of related party transaction, whether the possibility of invoking second provision to Rule 28, that in RCM cases, whether in related party transaction, there can be a difference between the self-invoice value and the actual bill value, that needs to be also dwelt with. RCM paid by mistake, there are plethora of case studies. Now there are High Court and CESTAT judgments in the earlier regime. Even if you pay the RCM by mistake and take the input tax credit, the input tax credit cannot be denied to you. The biggest issue, I would say, in GST, now slowly I would say we are handling pan-India litigation, at least in 10 big states. I have myself argued this matter before adjudicating authorities, contested before them, as well as before the Commissioner Appeal. In this week itself, I have argued before a Commissioner Appeals in this matter, where my supplier has not paid the tax, but he has filed his GSTR 1 or 3B, whether because he has not paid the tax, it is not the prerogative of the department to inquire at least with the supplier. The case of Supreme Court, in the judgment of Supreme Court in the case of Suncraft Energy is very, very clear. Department cannot come to you directly. They have to go to the supplier, inquire with the supplier. If the supplier does not pay the tax, only then they can come to the recipient. Friends, I would say slowly after Suncraft Energy, the matter is being somewhat accepted by the department. We have at the adjudicating level also forced, I would say, or pleaded and convinced the adjudicating authority, who have issued summons or investigations against our suppliers who have erred by not paying the tax. If the supplier has been found to be in existence, our case has been dropped. So merely do not accept that just because the supplier has not filed his 3B, you will pay the tax. Supplier, if you can prove that the supplier is existing, after Suncraft Energy, the department is duty bound to at least inquire with the supplier whether he is existing or not. There are other cases which you can go through. Again, 16.4 time barring period, all high courts are against you. Again, 16.4. However, Tirumala Konda, Plywoods, Andhra Pradesh, it all started with it. Now Govinda Constructions, and very recently we have seen all high courts are against you in 16.4 cases. They are saying that 16.4 is constitutionally valid. They have upheld the constitutional validity of 16 subsections 4. But friends, there are different cases. You have to distinguish your case, right? How you will distinguish your case? Say you have a case wherein you are ready to file your 3B. in the month of September earlier, now in the month of November, right? Earlier time barring period was the return filing date of the month of September, and now it is 30th of November, right? So if you can demonstrate that, gentlemen, I was ready to file my return, just because the 3B return could not be filed without payment and I did not have the cash flow to make the payment, just due to that my ITC cannot be time barred. Even maybe the Supreme Court upheld the validity of section 16 subsection 4, but if you can distinguish your case, not go against the constitutional validity of 16.4, but if you can take these cases also, I can give you another important weapon. Madras High Court, in the case of Shanmuga Hardware Electricals, has held that ITC can be availed in GSTR 9 also. If that be the case, then where is the question of time barring period under 16.4? So two important points I would give you for 16.4 cases if you are grappling with such an issue. Even if while we were all praying that the Supreme Court strikes down 16.4, but even if it is upheld, then you can always distinguish your case on merits. Again, ITC on construction or works contract services, many of the people or taxpayers, even till now, they are not taking the credit, but ITC on construction or works contract services are available if the value is not capitalized, if it is for movable property, and if it is for plant and machinery. So we do ITC optimization for all the taxpayers, all people who are in consulting space, all people, all the professionals who are in the industry. For your companies or your clients, you should do an ITC optimization. Merely because it is a works contract or construction, just do not write off or charge off the ITC. Similarly, in the case of Page Industries, it has been held that ITC on sales promotion item cannot be taken. In our concerted view, ITC on sales promotion items like brochures, mannequins, etc., can always be taken because they are for furtherance of business. They are not business assets. They are a mere expenditure or consumption in business, just like any other expenditure. Guest houses, ITC other than food beverage on guest houses, it is our opinion that ITC can be taken on all expenditure or guest houses other than, of course, which are blocked like food and beverages, etc. Because ITC on guest house expenditure is for, in some cases, reducing the cost of the company. If an employee goes every time to another state, stays in a hotel, it will cost the company more. So reducing the expenditure, the company has a guest house in some of the states. Therefore, guest house ITC can always be taken unless barred. If you do not have an e-way bill, can you be denied ITC? In our concerted view, no. There is no case for denial of ITC even if you have no e-way bill. If the supplier mention a wrong place of supply, we discussed at the very beginning of this deliberation when we were discussing that Chandigarh and Punjab case where supplier has mentioned place of supply as Punjab instead of Chandigarh. Can ITC be denied to you? In our view, no, it cannot be denied to you. If supplier has not issued e-invoicing, while our view is that you should insist on the supplier to issue an e-invoice, even if the supplier insists, or now if you're not doing with the business with the supplier, you can always argue that just because a supplier has not issued the e-invoice, ITC cannot be denied to you. Various other GST matters, corporate guarantee, burning issue. the value of 1% under Rule 28 and the circular issued in October 2023 has been stayed by the Delhi High Court, by the Punjab and Haryana High Court. So corporate guarantee, there is some relief. Attachment. If the department has done an attachment of your bank account, and if they are not releasing even after 1 year, you must take the shelter under Radha Krishna Industries versus State of Himachal Pradesh. In the case of Radha Krishna Industries versus State of Himachal Pradesh, the Honorable Supreme Court has laid down a code under which attachment can be done. Due to paucity of time, I am not going into the details. This PPT will be shared with you. And I have discussed already the case of Sanyukta Bhattacharya, Calcutta High Court, where even after the 30 days of extended period, the Commissioner Appeals was held to be bound to hear the case on merits. Few issues under customs. Related party transactions are always disputed by the department under customs. Specifically, we are arguing one of the cases in the tribunal where discount by the foreign supplier has been disputed by the by the customs department. We are arguing that case. Very recently, the case Sestat Chennai has held in such case that if the discount has been issued by the supplier generally to other people, if that can be proved, then just because a discount has been issued, a high discount has been issued to you as an importer, that cannot be disputed under the customs valuation rules. Even the Chennai Sestat has denied the opportunity of reassessment in this case, saying there is no question of reassessment. The matter has been achieved finality. Case is Paschal Farm Work India Private Limited. Okay, multiple assessments before bill of entry. I don't know why this matter was taken up by the taxpayer, but before bill of entry has been filed, multiple assessments is possible. That is always a settled law till now. But again, in the case of human health distribution, the matter was argued and the court held accordingly. However, in the same vein, in the case of Travancore Tuft Private Limited, the Honorable Sestat, Kerala High Court, I'm sorry, has held that even after the bill of entry has been assessed as exempt from IGST, even after that, even after filing the bill of entry, an amendment under section 149 of the bill of entry by paying the IGST can be done and corresponding ITC can be availed. This is an issue with many of the taxpayers. I will repeat. Say you have filed a bill of entry. Without payment of IGST, bill of entry assessment has been accepted by the customs. Now, post facto, you see IGST was payable, exemption was not there. You can get the bill of entry amended under 149, pay the IGST and take the ITC under GST. Clear? Similarly, a non-drawback shipping bill which has been filed can be amended into a drawback shipping bill. So amendment of bill of entry and shipping bill is valid. It has been held since so many years by the tribunal. The department keeps on disputing this, but it is our legal submission that such cases would generally be given a fair hearing and a fair order at the tribunal stage. So friends, there are other matters, but I think we have already, covered the matters in our agenda items. We will take all the questions now in the chat box. Okay, Mr. Singh says whether government will notify the president when the president enters the office, and how can we know when the president enters the office? Yes, it would be officially notified in the Gazette. So keep vigilant and watching for the notification. My client has sold the property in the month of September 2023 and the entire amount was invested in capital gains tax scheme. Now he wants to invest in notified bond under 54 EC of the Income Tax Act. The question is whether he can do it. While it is an income tax question, I can say we have already dealt with such cases. Of course, he can invest in the capital gain scheme under 54 EC even now, even though property has been sold in September 2023. There are plethora of judgments in this regard, and the same can be done. Mr. Patki says 10% is paid as the deposit in the first appeal, in 20% in tribunal, 20% to be calculated on the basis of first appeal, or additional 10% is required. What happens to 10% paid in the first appeal? So, Mr. Hemant, it is very, very clear that commissioner appeal stage 10%, tribunal stage additional 20%. So total 30%. And if you lose in the tribunal, again reiterating 100%. Appeal to first appeal authority expired. 90 plus 30 days, how to go? Can we go for the tribunal? First of all, you must taking the shelter under this Sanjukta Bhattacharya case, Calcutta High Court. Appeal to the first appeal authority. Try that at least you get a good hearing at the first appeals authority also. But in case even after the judgment of the Calcutta High Court in the case of Sanjukta Bhattacharya, if the appellate authority rejects on the basis of time barring period, then of course you have to go to the tribunal. Ms. Bhavna says we have to defend extended period cannot be invoked in bona fide cases. Further, can a state issue circular that since SCN issued under 74 and ultimately tribunal has remanded back the case, then 2 years time limit shall be provided for redetermination of demand under 73. Very good question. My replies are as follows. Number one, under section 74 also it has been provided that where a demand has been issued under section 74 and if the mens rea is rejected or if fraud, suppression, misstatement allegation is rejected, then the notice would automatically take the color under section 73. The question is, if the as per the date of the notice, if the time barring period under section 73 has elapsed, that can be contested. The state can do whatever it feels like. They can issue a circular stating that even if the time barring period under section 73 has lapsed, even then 73 would prevail. But in our legal submission, the time barring period under 73 is contestable in such cases. I hope I have answered in detail. Yeah, PPT will be shared with you all. Mr. Vikas says vendor has paid GST utilizing ITC, availed on the basis of bogus invoices. Okay. Recipient paid GST to the vendor and availed ITC. Vendor has, I'm repeating, vendor has paid GST ITC utilizing ITC. Oh, vendor has availed bogus invoices. Recipient has is genuine. Vendor SCN is issued to the vendor, demand confirmed. However, recovery cannot be made from him because he has become insolvent. The recovery can be made from the resident under 16(2)(c). Very good question, Mr. Vikas. Oh, these are really quality questions. See, if the transaction between your recipient and his supplier is genuine, merely because the vendor of the supplier is ingenuine, that cannot be a ground for recovery against you. Number two, the very fact that you are saying vendor has become insolvent, if he has filed for insolvency, then the insolvency proceedings would overturn or would supersede GST recovery proceedings. Department has to go to the IBC professional in case insolvency has been officially filed. But merely because the vendor's vendor, L2 vendors, this is called L2, level 2 supplier case. Just because supplier has done a mischief, your supplier has not done a mischief, and he has become insolvent, that does not give the authority to the department to come to you until and unless the department can prove that the vendor was hands in gloves with his vendor. Is there any time limit to avail ITC against bill of entry as per ITC rules? No, no time limit. Mr. Mohan says, sir, in the case of credit note issued by the supplier, how will they know whether recipient has reduced the same in the GST returns, as many officers are rejecting credit notes to the supplier on this issue? Please clarify. Yes, pan India, this is an issue. However, we advise two things. First of all, the department will not succeed in the litigation. Just because the vendor may or may not have reversed the ITC, you do not have any machinery as a supplier to ensure that the ITC has been reversed. So you can always litigate in this matter. However, what we suggest to prevent litigation is that you must always take a declaration from your, recipients, that they have reversed the corresponding ITC once you issue a GST credit note to them. Mr. Sudhakar says Suncraft Energy judgments has been passed by the Kolkata High Court. Supreme Court rejected the case for appeal. Mr. Sudhakar, maybe you must recheck your facts. The Honorable Supreme Court has upheld the judgment of the Calcutta High Court. However, many people are creating a confusion, or there is a confusion, that the Supreme Court has upheld only on the basis of material amount involved. But if you read the judgment very carefully, I have read it many times, although it is just a 4 to 5 lines judgment, the Honorable Calcutta High Court, on the basis of materiality as well as on the basis of facts of the case, have upheld the judgment of the Honorable Calcutta High Court. Mr. Ravi says, what is the legal position as far as reversing September and re-availing ITC post September where the conditions under 16 are met? It is our legal view that there is no time limit for re-availment of ITC. That is also the legal position as per the CGST Act, especially after the insertion of Rule 37, Section 37, capital A. It is more or less crystallized. Mr. Sunil says, can GST credit reclaimable other than the case of 37A, for example, recipient received the supply in the month of March? Yes, I think I have just now answered this reclamation of ITC. Irrespective of Rule 37A, also I would say reclamation has no time limit. Mr. Baibab says there has been an order by the Advanced Ruling Authority in the case of NALCO for guest houses. I am aware Mr. Bebav, NALCO Orissa Advanced Ruling Authority has rejected the ITC on guest houses. However, in my respectful submission, the order is very, very vague. They have not given a reason as to why they do not consider guest houses as furtherance of business. Number two, they have held that where the amount is recovered from the employee, in that matter, the ITC is unavailable. I stand by that. But rejecting the plea that it is furtherance of business in our legal submission, that is not the right legal position. And advance ruling judgment is for the applicant and not for all. Mr. Mohan says, can different notices for the same year be issued by the adjudicating authority? So you have to mention the section. If you are saying it is notice for different years, for section 61 cases, then it is not possible. You can contest it against the SOP circular issued by CBIC. However, if one proceeding is under 61, one is under 67, one is under 65, then it is possible in case the issues are different. But if an issue has been decided in 61, that same issue cannot be taken in 65 or 67. Bill of entry not appearing in 2B, can ITC be availed? 101%. Maybe there is no guidance under ITC rules, but ITC cannot be denied merely due to technical glitch. Mr. Bhavik says GST on royalty is pending before the Honorable Supreme Court. However, department is investigating as considering as a special case, issuing show cause and demands. Yes, the department can issue a show cause even though the matter is sub judice before the Honorable Supreme Court. However, we have to contest on the basis of the matter being pending before the Supreme Court, and we must file our replies and our appeals in this matter and contest accordingly. Mr. Sunil says whether ITC would be reversed when credit note issued under export sale where material not received, or if the sale is not realized and later it is treated under bad debt. Yes. So ITC needs to be reversed if there is a bad debt. Now credit note is a different matter. Credit note is maybe for deficiency of goods and all. So if it is for deficiency of the goods or quality of the goods, then ITC need not be reversed. But if the material has been destroyed and it is a bad debt, then of course ITC needs to be reversed. Can we claim ITC on IGST paid on imports of good not showing in 3B? I have answered this. Yes, 100%. No question of denial of ITC. Okay. Nice presentation. Thank you very much. Mr. Ajay says whether ITC on hiring of ambulance, very, very good, is not for is available since it is not for transportation of passengers and it is mandatory under the Factories Act. Mr. Agarwal, I have just now issued an opinion to one of the taxpayers. In our concerted view, 100% ITC is available for ambulance if it is as per the Factories Act. 100% available in our view. Mr. Shirshad says additional director under investigation do the case and get the payment through client wide DRC3, then GST audit can also be done by them for 1718. Additional director under investigation do the case. Mr. Rajesh, kindly if you can make it little clear. The question is not clear. Whether refund of freight and insurance can be claimed under export of service. Since refund under export of goods is allowed under FOB, value getting refund is right of the SSC. Refund of freight and insurance under export of service. So your goods are under FOB. So how freight and insurance are involved? Mr. Ajay, I would need a little more clarification on this. Mr. Ashwin says in electronic credit ledger reversal and reclaim statement, whether the balance is visible if we have inadvertently shown 4D2 instead of 4D1, can we reclaim this amount? Yes, electronic credit reversal is a different matter, but if you have reversed it and reclaiming it, if you have reversed in 3B and you are reclaiming it, ITC is available. Mr. Gyan says Punjab and Haryana High Court stay on circular of bank guarantee. Can we hold paying RCM on bank guarantee or still pay till further order? The bank guarantee is forward charge, right? Now, the question is whether you need to pay or you can hold on. See, in our view, if it is a revenue neutral transaction for you, if your recipient can take the input tax credit, why go into litigation? Pay, take the credit. If the recipient cannot take the credit, if it is cost to you, then of course you can wait for the High Court's decision. In our view, right, the valuation of 1%, that I would say is ad hoc and arbitrary. How can the value be fixed by the department of the corporate guarantee? Furthermore, in our view, this 1% on the value of the corporate guarantee, that is not the actual service which is being availed. The corporate guarantee may be issued for 100 crores, but may be utilized only 1 crore. So 1% on 100 crores, that is absolutely ad hoc, arbitrary, and against Article 19(1)(g) of the Constitution. Okay, Mr. Ajay says investigation under Section 67, inspection is already going on, but audit notice also issued for the same period. Can we get a waiver? All the high courts, Mr. Ajay, have held that audit and investigation can be held simultaneously. You should comply with the audit requirement. I don't think that contesting merely on this ground is an issue, but you can contest on the issue which is being raked up by the investigating agency. Say investigating agency is investigating on supplier non-compliance. Same issue cannot be taken up under Section 65. Mr. Ganesh says RCM applicable on procurement of TDR in addition to FSI. Is RCM applicable? Yes, sir, RCM is applicable, Mr. Ganesh. And after this judgment of the Telangana High Court, Telangana or Andhra Pradesh High Court, AP High Court, I feel one of the two. In fact, I need to recall this. The matter will go to the Supreme Court, but I think as of now, the position of the law is RCM is applicable. Mr. Ravi says whether ASMT 10 notice issued without DIN is valid. Absolutely no, not valid. If issue decided in 61 for the rest of the points, whether notice be issued for 65, I have answered this. Consolidated adjudication can be made for multiple years. Procedurally wrong, you can contest this. Okay. Thank you, Mr. Dasgupta and Mr. Arjun. Mr. Bhuvan says, can audit be again happen once inspection is done covering all the points under 1(9) trial balance taken at the time of inspection? I have answered this, no, it cannot be done. Whether ITC is available when supplier's RC is cancelled retrospectively, but supplied when RC was in full force. No. Calcutta High Court, LGW Industries comes to your rescue. Mr. Agarwal, goods are exported under CIF, but refund allowed under FOB. Yeah, okay. Now I understand. So, very good question. Now the freight and insurance, when the export is allowed under FOB, this can be contested, Mr. Ajay. I think this is a valid legal ground. When you are giving me a refund on FOB value, then you have to treat my freight and insurance as an export of service. However, you need to see the place of supply. Whether RCM is payable on overseas corresponding bank charges. Mr. Prajesh, I need to check this out. Overseas corresponding bank charges, correspondent bank charges, RCM. This needs to be checked. Prima facie, I feel no, but needs to be checked again. I believe Mr. Saurav says, I believe Supreme Court in Suncraft Energy, facts and circumstances of the case not interfered with. In this regard, can it be not be said that the judgment of Supreme Court has limited precedent value, as it is only on the ratio decidendi of a judgment which is binding? Sir, how can it be says that it is only the ratio decidendi which is binding when the Honorable Apex Court has very clearly says facts and circumstances of the case? In my legal view, the judgment of the Calcutta High Court has been ratified by the Honorable Supreme Court when it is very clearly saying facts and circumstances of the case. Mr. Gyan says if we are exporter of service and paying RCM on receiving services from overseas vendors, can we claim refund of RCM? Yes, why not? Reza says we have been issued one demand SCN for 100 rupees and say another SCN for 200 inclusive with 100 in a period of 2 months. Then DRC 7 has been issued on both SCN. How to contest this? Should we file 2 appeals? Yes, you must file 2 appeal. Procedurally, that would be the right thing to do. And you have to contest duplication to the extent of 100 rupees. Question is now pre-deposit. You must contest this at the pre-deposit level also to the extent of 100 rupees pre-deposit is concerned if the value is material. SEZ state GST raised the invoice to normal GSTIN invoice. Please explain tax applicability. Well, it is very, very clear. SEZ supplied to the DTA. That the bill of entry has to be filed by the, you see, DTA. Yeah, PPT will be shared with you. Supply pay tax in 3B and filed. So last question, supplier pays tax in 3B and filed 3B, but filed GSTR 1 after the due can recover, allow to take ITC. Supplier pays tax in 3B and filed the 3B, but filed the GSTR 1 after the due date, that is March 23. Okay. Can receiver allow to take ITC? Absolutely. We have contested this case already in various forums. Our legal view, of course, ITC is available. It cannot be barred. Okay, so thank you very much. I think we have answered all the queries which have been raised. Thank you for joining. Next month, we'll again have you in the colloquium. We'll again hold another colloquium. Thank you very much. Over to Samir.
Thank you, Vivek, for this extended session and taking up all the queries. Thank you for thank you participants for having with us during this session, and we look forward to your participation in the coming sessions. With this, we come to the end of this webinar, and thank you for joining us. Thank you, Vivek, once again.
Thanks, Samir.
Thank you. We'll share the presentation on mail in due course. Thank you. Thank you.
Thank you, Vivek sir, for this wonderful deliberation. Thank you, Samir sir from VILGST for coordinating with us. Thank you all the participants for attending the webinar. We conduct such webinars every month and we hope we will get you in the upcoming webinars as well. We will shortly share PPT and video link to all the participants. Thank you all once again.
Thank you.